Good morning all. Welcome back to ANZ News. Hope you've all enjoyed a pleasant break over Christmas and that you all haven't been too affected by any COVID restrictions during that time. It's Monday the 11th of January. Today we're talking reflation and the Reflate Debate. The hot word in financial markets as we start the new year is reflation. Investopedia defines it as reflation as a fiscal or monetary policy designed to expand output, stimulate spending, and curb the effects of deflation, which often occurs after a period of economical uncertainty or in a recession. The term may also be used to describe the first phase of economic recovery after a period of contraction. Now, of course, we've seen the first part of that definition since the GFC, but never really saw the latter. Reflation being the trade du jour now is all about that second sentence. With a blue sweep seeing the Democrats taking control of both houses, Biden openly talking about trillions in stimulus, and the Fed confirming that they're not even thinking about raising rates, the market is now all in on the reflation trade. Such a reflation trade is normally bearish for the USD and bonds, hence yields up, and bullish for high-risk equities and commodities. So, ears pinned back is the market that Friday's shocking NFP employment figures, 140,000 jobs lost, and the first decline since April, the political and social dramas around Capitol Hill, and new record numbers of COVID cases and deaths, that the market rallied. Yep, everything's awesome, apparently. Citibank's panic euphoria model just printed a never-before-seen high. Here's that chart here from them. In commenting to the implications of returns from here, City Chief's economist said, there is now a 100% historical probability of down markets in the next 12 months at current levels. But the market doesn't care. But for now, euphoria remains. Reflation is the trade, and this saw big losses in gold and even silver as the falling bond prices saw yields surge. And more relevantly for gold, real yields rise too as inflation lags. We say even silver as it would normally perform well in a reflation trade, given its dual attributes of monetary metal and more relevantly industrial metal. This may as well have been a buy the rumour, sell the fact trade for silver given its strong returns in 2020 on expectations. The reality is we're still firmly in the rumour phase of this reflation narrative. People are just misinterpreting expectations or hope with reality or fact. The elephant in the room is inflation. Real rates are nominal rates less inflation. Nominal rates are indeed rising for now. Inflation, on the other hand, has been technically absent, or at least below the Fed's 2% target, but stealthily and certainly practically rising. The chart we're going to show next clearly shows, however, it is now breaking a near decade-long resistance line. Add in, it's going to be trillions Biden, with the support of Congress, and all of a sudden the stimulus is going full double whammy of both fiscal to people's wallets, $2,000 checks, etc., and Fed monetary stimulus. Here's that inflation expectation chart here. And herein lies the perpetual post-GFC dilemma. Pump in money hand over fist and risk losing control of runaway inflation, alluring to some extent to extinguish some of this debt, but devastating if too strong because of the interest on servicing the very same debt. Tighten, like they tried in 2018, and remove the only real thing supporting record high markets and crash the whole house of cards. This has experts somewhat torn. Two of Real Vision's greatest minds, Raoul Pal and Lynn Alden, are at opposite trades. Pal believes this is the most one-sided trade he has seen in a long time, and one not taking into account the current realities of record COVID cases, deaths, and forced shutdowns, with any vaccine relief too far out to change the mass of insolvencies already beyond stopping. All one-sided trades inevitably correct sharply, and he is taking the contrarian trade. Alden believes the reflation trade will play out, but purely on the basis of continued stimulus, which, without it, will end badly. Should the reflation narrative actually turn to fact, silver is likely to be the pick of the precious metals. Silver would normally ride the commodities boom that comes with reflation. That many stimulus packages will be tied to green initiatives just adds weight to the given its solar panel uses. Likewise, platinum for its use in green energy vehicles. Silver's monetary market then presents a great hedge for each way betting. The market appears to be acknowledging this, with the falling gold-silver ratio looking to break out again. Gold presents a more complex proposition. Should the reflation trade play out to actual reflation, but the stimulus keeps coming as promised, they won't risk another December 2018 taper tantrum, then we should inevitably see some strong inflation against capped bond yields as the Fed might fight to contain them. That brings bigger negative real yields and gold shines. Should the reflation trade fail and the recovery does not materialise, you then have an inevitable flight to safety into hard assets. Even more stimulus as the Fed and Biden double down, more debasements of currencies and amid potentially crashing markets. All great for gold. If, however, we get rising rates via bond yields, a strongly growing economy of an order to overcome the debt burden, and contained inflation, that will then represent headwinds for gold. 2021 promises to be a year of market volatility amid such conflicting narratives and unknowns. Our trademark of balance your wealth in an unbalanced world would make a great New Year's resolution. Well, thanks for joining us for the first news to kick off 2021. Remember ainsleyBullion.com.au for all things gold, silver and platinum. You can check out ainsleywealth.com.au for all of our cryptocurrencies. And if you get to check it out, goldsilverstandard.com. That's a gold and a silver-backed cryptocurrency built and backed by Ainsley and stored at Reserve Vault in Brisbane. Enjoy your Monday. We'll catch you tomorrow for more news.